Matt from the Trade Brigade here doing a technical analysis on ticker symbol IWM, which of course is the Russell 2000 ETF. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will of course be an update. You can see we have some levels mapped out. This is a market that we watch fairly closely, not so much for trading, but just broader marketplace indications. And what you'll notice is that this is in stark contrast to many of our other sectors right now, or broader marketplace indexes rather, the S&P and the QQQ. So for now, what this would tell me is that there's still weakness out there in small caps, which would generally be a risk-off signal. Now, Apple is gapping up on earnings, and that may be a complicating factor here. However, the weakness and the sort of deterioration of this bear flag that's been forming on the daily, oops, let me clear that up, is starting to become a little bit concerning because we know the next major support underneath is way down there around 185, and then worse than that, I mean, we talked about this on the Wednesday video, right? 164 is really your next dominant structure coming from the only sort of area we have in the past, right? This was basically a vertical move, which is going to offer very, very little in terms of support. So take that 184.50 with a grain of salt here from the daily time frame. So back on down, just so we can talk and see the structure on the left-hand side as we talk about it on the right. So to me, big breakdown really started to unfold on the Wednesday session here, mainly noting that we had these higher lows, right? And then in the last 30-minute bar, or hour rather, we sort of gave that up. So to me, fairly concerning, obviously made the new equal low. We would watch for either the next lower high and then an entry to the downside, right, underneath that 191.70 to get us into that next daily target we pointed out, 184.50s. If it is going to be a reversal, again, maybe if you're really, really someone who's intent on taking a lot of risk in the marketplace, it might be a long down here with a stop just below, and then you're looking for a rotation to the top end of the range here. But you've got to be the trader that's disciplined enough to say, okay, as soon as we take out that stop loss, I got to bail on the position because I know there's a lack of market structure underneath us. So if you've been burned because you haven't stopped out of a position in the past, that is certainly not the trade that you should be looking for. Instead, you should probably try to trade with the trend, which would be, okay, wait for the lower high, reattempt, breakdown into the future. Or if it's going to be a larger reversal, you're only going to look for longs if we can recapture 202, but more importantly, 208. We know that that's really the daily level where the balance started breaking down from, right around in here, right? So those are my rough thoughts in IWM. It does look more bearish than bullish, obviously, with this bear flag really starting to break down into the end of day today. Acceptance lower. Would I chase it here? No, I'd probably wait for the lower high and then break. If it does want to go immediately, it would be something like this, right? So a break and retest of that level. There's your entry, or back down underneath that low to get us all the way into that 184.50 target. So that's what I've got for you. Those are the numbers, and that's the structure. Geez, tongue twister there. And that's going to wrap up the video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.